I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. The USDA's July WASDE report gave grain markets a supportive surprise on Friday, with tighter supply outlooks helping lift futures. In corn, the agency cut 2026 and 27 ending stocks by 170 million bushels to 1.79 billion after increasing feed demand and export projections. World corn ending stocks also fell nearly 6 million metric tons, largely due to smaller crops in France and Hungary, helping corn futures extend gains after the report. Soybeans were viewed as supportive as well. While the U.S. ending stocks held steady at 310 million bushels, traders had expected a slightly larger carryout. USDA did raise its production but boosted exports. USDA World Agricultural Outlook Board Chair Mark Jekanowski explained that increase.
Raised our export forecast for the old crop year by 10 million bushels and then carried that strength into the new crop year, raising our export forecast by 30 million bushels.
On the global side of things, soybean ending stocks did decline on lower Brazilian supplies. We also saw a tighter balance sheet. U.S. ending stocks were reduced to 722 million bushels, the smallest carryout since 2022. While global wheat ending stocks fell on lower production estimates in several key exporting countries. Overall, the July WASDE report did point to tighter supplies than many traders had anticipated. Cattle slaughter trends have largely maintained their status quo through the first half of the year, but there have been some noticeable changes affecting the markets. Through the week ending July 11th, year-to-date, cattle slaughter totaled 14.3 million head. That was down 8.5% from the same period last year. Now, both steer and heifer slaughter were lower during the time frame, which was down about 8.2%. Lower inventories to start the season were certainly a factor for lower slaughter levels, but more days on feed have also been a driving force. Steer slaughter is down 6.5%, while heifer slaughter is down nearly 11%. The difference of what is moving through the supply chain supports quarterly data that the percentage of heifers on feed is declining. The USDA lowered its 2026 beef production forecast last week. The decline in output was due to a lower slaughter rate of steer and heifers through the end of the year, offsetting an increase in cow slaughter. Next week, we will receive an update of how slaughter trends have been impacting the overall U.S. cattle herd in the USDA's biannual cattle inventory report. Brazil's National Supply Company, or CONAB, raised its corn production forecast this week. Output was increased to just over 141.7 million metric tons expected for the 2025 and 26 marketing year. If realized, the new forecast would be a record for the country, surpassing the last season's production of 141.2 million metric tons. That is also 1.3 million metric tons above the previous June estimate. The country's first corn crop is almost harvested, and production is estimated at 29.6 million metric tons. The second crop that follows at 39% harvested. The first crop did see a relatively good weather for the region, supporting crop development through the harvest. Meanwhile, the second and third crops have seen periods of dryness as well as a lack of rainfall recently, which may impact later crops through the rest of this harvest. From a global perspective, the U.S. accounts for about 33% of global production in 2025 and 26. China does represent 23%, and Brazil follows at 10%. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.